All right, everybody. Thank you so much for taking the time out of your day for tuning into the first edition of Financial Fitness. Today is going to be a special day. We do have one of our great friends right here in California. And let me just first start out by giving you the objectives of this show and let you know what we looking to accomplish. Now, the objective of the show is to educate, empower, and help raise the awareness around the topic of financial freedom. Now, the truth is that most people are not even aware that financial freedom is even believed to be possible. And really, when I came across the topic of financial freedom, I was on a hunt to figure out how can I do better, because I knew that the 9 to 5 wasn't gonna be what allowed me to live my ultimate dream, because really only had a job to be able to pay my bills and do the day-to-day stuff that I needed to do just to survive, really. And a lot of us find ourselves in a rut and we don't know how to get out of it. And my goal is that with the individuals that I will bring with me on this platform to be able to help you figure out a way out. Now, not everything we're going to talk about will make sense for you, but at least if there's one thing that makes sense and make a difference, sparks a plug in you, I hope you take action on that and you decide to focus on learning more about it, see where that leads you to. Because at the end of the day, everything is not for everyone. But find out one thing that's for you and then act on it. The one thing that's going to make a difference in your life is action. Now, by taking action, you will then be able to realize your ultimate God-given potential, and you will then raise your awareness. And with that awareness, you'll be able to change your life. So today we do have one of my favorite persons out in California, actually the one that I only know in this industry. And he's within the life insurance industry. And this gentleman comes from a corporate banking background. After spending almost a year and a half in the industry, after he got out of high school, he realized that there was no potential for growth. That's when he decided to take matters into his own hands and start his own company. Now, this gentleman I'm going to bring with you guys today has been able to realize something that a lot of us are still trying to figure out how to do. So I am not going to take too much of his time. So let me not take the light away from him. Let me allow him to introduce himself. Ara, go ahead and introduce yourself, my friend.
Awesome. Thank you so much, Steve. Thank you for the warm welcome. And hey, that was a good introduction, but I think I can add more to it before we get started. Just a little bit by myself. Let me go back a little. Well, I'm actually an immigrant to this country. So I came to the States when I was actually 7 years old. So what happened was everyone came to this country. Why? Because of land of opportunity. My parents came here. Actually, my dad took the first chance and he flew over here, and I didn't see him because I was only 3 months old. So he came to the States, worked, so we can provide over there back in my country in Armenia. So what happened was, and then he brought over my mom. My mom came, she was in the clothing industry, and my dad did everything you can possibly think of. And then what happened is, like, you know what? I want you guys to come over here so we can take over this opportunity that's being given to us, so you guys can use it too. So hey, I didn't see my dad since I was 3 months old. And my mom left when I was 3 years old, so I live with my grandparents and my brother. So when we came to the States, long story short, when we came to the States, my dad always said one thing to us, and he always said, whatever you guys do, to me and my brother, whatever you guys do, always do it with your own personal pen. And that always stuck with me. I'm like, all right, I don't want to do the hard labor work. I want to do something with my own pen that can create income for me, for my family, and for my family to come on and generations on. So what happened was, after graduating high school, I got into the banking world, corporate banking as a personal banker. No experience, nothing. Within 1 year, I became number one youngest production bringer to the company for California within our region, and number one in customer service. But you know, there's one thing that stuck with me. I was like, you know what? I don't think this is for me. As much as, yeah, banking is good, it's like a chain. But you know, I think I deserve more. I think I can go out there more. There's bigger calling out there for me. So yes, I'm like, you know what? Let's see what else is there. That's when I got into a business with my own brother, because my own brother, just like everyone, they have their own mentor and coach. My own brother is my own mentor and my own coach. So what I did, I'm like, my ears are all for you. give it to me. What can I do? He's like, just follow my footsteps. That's when I quit my college too. I went for college for 6 months. I quit college and got into the financial services industry. And let me tell you something. It has taught me so much that I would say throughout my high school and 6 months of college, probably never has. It's
Yeah.
whether it's personal, business, or just in life.
Mhm.
So that's a little bit by myself.
All right, perfect, man. So today, one of the important things we're going to be talking about is the evolutions of life insurance, and have you seen the industry to change? Now, before we get started, really, um, how did you get into insurance, man? Besides just having to get tired of your job.
Uh, how do I get into insurance? That's a great question. It's actually again through my brother because my brother was he got into the industry when he's actually 18 years old,
Hmm.
and I've been always like in the background looking at him because I was like 16. I'm like, man, you're always dressing up sharp. You're always going somewhere.
Yeah.
I literally want to know what you're doing. He's like, give us some time. Give us some time. Once I became 17, he's like, all right, I have to talk to you. I'm like, okay, tell me, because he knew I was going to be 18 next
Yeah.
year. So I'm like, okay, bro, let's tell me. So he's like, this is the business I'm doing, and this is the crusade we got to do, because
Perfect.
uh, there's a bigger calling. Like I always say, it's not like, let me put it this way: in banking,
Hmm.
there are specific people you have to target in order to get a client.
Hmm.
And who are those people? People who have money in their account.
Yes,
People
sir.
over 100,000, 150, 200,000. That's the people you want to talk to, because you're not going to go talk to someone who has an overdraft already.
Yep.
You can't sell them anything. So in this industry, what I noticed is you can help someone that doesn't have money, and you can help someone that does have money. So that would attract me the most, because there's a big demand out there.
Yep.
I'm
Yep.
like, okay, I'm with it. So that's how I got into the insurance industry. And
Put it this way,
ever
in
since then,
banking, there are specific
it's been
people
great.
you have to target in order to get a client. Okay, now one of the things I want to bring to you, I know what we always talk about is why we got started and things like that, because really, those are some of the reasons why we continue doing what we're doing. So, if you don't mind, I mean, why did you get started, and why are you still going? Because at the end of the day, that will be what sets you apart from everyone else that's in the industry.
Yeah, yeah. Steve? Can you say that one more time? It was hard hearing you the first part.
Yeah, what I was asking is, why did you get started, and what keeps you going at the end of the day? Because I know that what sets you apart is always gonna be your why. So just share with us as brief as you can, and help us kind of have an idea so we can kind of grasp, where you at and where you going.
Okay. So why I started is honestly because just like in any industry, because let me put it this way: I honestly worked at every industry you can think of. I started with
Hmm.
car wash, laminate flooring, whatever you can think of. I did all the dirty jobs you can think of. So
Hmm.
when why I started this industry is very simple. I actually want to help myself first and my own family,
Hmm.
because if the wealthy know something about the wealthy game, the money game,
Hmm.
how come the middle class and the poor class they don't know about it? So I'm like, you know what?
Yeah.
I want to educate myself first, and then I can educate the people around me second, so I can help them out. That's why. Second, and what keeps me going? Number one thing is my family. My family is my biggest why, because
Perfect. Perfect.
whatever I do, I have to give it to them. Whatever I do, I have to give it to my dad and my mom, because they took a chance. They flew out to this country with no money in their pockets, and I want to write that check every month. Sorry. I want to write that check every month and give it to my dad. Like, hey, just enjoy this money right now with mom.
Perfect, perfect, man. I appreciate it, man. So, thank you so much for taking taking the time out of your business to come and help us understand the industry more. I'm gonna go ahead and give you the control of sharing all that you have prepared for us today, and I cannot wait to learn. And any questions that I may have that comes along, I'd be more than happy to ask. And if anybody watching and have questions, please go ahead and drop them in the comment box, and then we'll address them as well. All right, man. Go ahead and take it over, man.
Sounds good. All right. So let me just share my screen real quick. All right. Can you see my screen?
Yes,
Steve?
sir.
All right.
Yep.
All right. So I'm going to talk about briefly about the insurance industry and a bit more specifically about the life insurance and how life insurance industry changed so much. Because just like any other industry, everything's changing. We got smart TVs, we got smart cars, we got smart computers, and we got smart cell phones. We got everything smart. So what is the reason that's happening? Because of the upgrades. The industries are evolving so fast that people have to people have to go with it. Same thing with the financial industry, and same thing with the life insurance industry. Why I'm saying this is because many people only know life insurance as, you know what, you pay, you die, your beneficiary gets the money. That's absolutely true. That was the case back in the days. Why? Because where the life insurance industry started coming and why it became so popular is because back in the days, people would only live up to, the average age was 45 to 50. Okay. And where did the concept of life insurance come? It came from the churches. Why? Because the funding came from the churches. Someone passed away, they would give it to the church, and the church would do the burial services for them. So, for example, life insurance, many people know as just you get a coverage. For example, someone gets a half $500,000 coverage, right? They get a $500,000 coverage. Within a certain period of time, something happens to that individual, a premature death, the family will receive the $500,000 check. But again, this was back in the days. Again, there was only specific products, and there was actually one product, and that was just a term insurance policy that would go from 5 to 30 years, because the average age was, again, 45 to 50. So because of modern technology and all this medicines and all these doctors that are doing some amazing job, what happened? People started living longer, and some questions came up. They're like, okay, we're not passing away, but we want to retire in the future, but we need some supplemental retirement. We need some money to survive. So what happened? Life insurance companies, they're like, you know what? We have to adapt. We want to give what the clients want. We got to give what the consumer wants. So what happened was they added a new benefits to the life insurance industry, and that was cash value. If people are watching this right now, you guys know about cash value. It's a supplemental retirement income. And what happens is you pay premiums on your life insurance on a monthly basis. What happens is your money gets divided. Your money gets divided in specific places. One of them, it goes into a savings account, which generates you interest on your money. And the interest works tremendously. Let me tell you something. I come from a banking industry, and someone was to come up to me and say, hey, I want to open a CD, or I want to open a money market savings account. I'll be like, that's a great choice. But in the back of my mind, I was like, that's not so good. Why? Because let me put it this way. If I'm offering something to someone, I want that person to feel that, yes, that is something they need to have, because I personally own the product as well. Why? Because if I were to go up to Steve right now, and Steve owned the restaurant, and I asked Steve, is this cheeseburger good? And it says, I never tried it. I'd be like, oh, okay, then in my mind, I'll be like, I don't think I'm gonna try that, because if it's his own restaurant, he's not trying it. I think it's pretty bad then, because he doesn't like it. So whatever I talk about, whatever I'm sharing with you guys right now, I personally own it on myself, because I truly believe in it. See, in the banking, I didn't believe in it. Why? Because if someone came up to me and said, I want a money market or a CD, I didn't own any CD or a money market, because I knew what they were giving it as a rate of return. For example, a CD, let's say they give you a 2.25, or a money market, let's say they're nice enough, they'll give you 1%. Or for a 12 months rolling period, they'll give you 2.25 if you put, let's say, 10,000 or 20,000. And if you put 50,000 or above, they give you 2.75 only on a 12-month rolling period. So again, when we go back to the 1 year end, what interest rate are you getting? Well, many people don't know. They still think they're getting the 2%. That's actually false. You're gonna go back getting 0.005 or 6%. Let's just say. And people don't know about the compound interest. They don't know about the compound interest. What is the rate of return and how the money game works? And there's a simple rule to that, and it's called the rule of 72. What the rule of 72 is, you divide the number 72 by the interest rate you're getting. That's how long it'll take for your money to double every year.
Wow.
Okay, for example, someone who opens a money market, they put $10,000 in there. You divide 72 by the interest rate you're getting. It's going to take you 72 years until your 10,000 to become $20,000.
Yeah.
And now, within the life insurance industry, there's so many great products out there that people who get a policy on a monthly premiums they pay. What happens is some portion goes into the saving, which generates some interest. It can go from 0 to up to 15%. And many people probably are like, is there such thing as 15% on a rate of return? There is. Or a lot of people say it's too good to be true. I absolutely agree with you. Go check your credit card. What's the interest rate on your credit card? 24, 18? Some of them even like 25 or 28.
Yep.
Why? Because the banking knows the money game. The bank knows how they can make money off of you. So again, going back to this, now we got the life insurance and we got a savings for people who want to retire. They want to have a peace of mind. That's great. But again, people weren't satisfied with this. They're like, you know what? Yeah, I'm not going to have premature death. I'm healthy. I'm completely fine. I'm not going to retire anytime soon. What if I get in sick between those years? You know, that's where life insurance companies are like, you know what? We got to give something more to this consumer because they're asking for more because they're starting losing clients. So what they brought the specific riders, which is called a critical, chronic, and terminal illness. And that's called living benefits. They brought a living benefits added on to a life insurance. So what happens in this situation? What happens in this situation? Someone who purchased a life insurance and they have this living benefits, if they get any critical illness, any chronic illness, or any terminal illness, they're able to accelerate their $500,000 coverage or whatever the coverage they have and use it while they're still alive to cover any expenses they have, whether it can be mortgage, it can be car, it can be anything, utilities, you name it. So what happens? How do people break it down? If someone is in a critical situation, and what a critical situation is, basically heart attack, cancer, stroke, and anything that the doctor said this is critical. In California, critical illness basically means if someone has a medical condition and is left untreated, and it can cause death within 12 months, that's a critical situation right there. For example, I'm going to bring an example of my own father. My dad, he was 50 years old, and they told him, you know what, we got to do an open heart surgery on you. They did 3 bypasses on him. Wow. 3. So what happened was we found out my dad was actually had diabetes and all of those crazy sicknesses that you can think of through life insurance. Why? Because we applied for it. They declined them because of his medical records. So if my dad were to have this specific policy and they were supposed to do the open heart, he could have easily sat at home right now. And he's a barber, by the way. He could have easily sat at home right now and have the money coming to him. Why? Because he took the right step at the right time, because you never know what's going to happen tomorrow. You never know what's going to happen the next 2 minutes or 3 minutes or the next hour. So if a situation was to come up on a critical illness like this on an insurance policy, companies talk to the doctor and they see how severe your situation is. And what happens is they're like, okay, this person's situation is very severe and it's very critical. They can accelerate up to 90% of their death benefit, which is their coverage, and use it for their own good, whatever they want. So that's crazy to me. Many people, they're like, you know what, I want only 40%. I want to leave the rest for my family. Okay, that's perfect. Just use the 40%. Or some people are like, I want everything. Give me the 90%. Go ahead. And then comes the chronic. What is chronic? Chronic means it has to be a permanent situation. You need to have a permanent illness. And what I mean by that, you cannot perform 2 out of the 6 daily activities. And what are those? Basically, dressing, bathing, showering, transportation. You need physical assistance from somebody. Okay? And at that time, different companies work differently, but most of them give 2% on a monthly distribution if you're qualified, or 24% annually. Okay? Then comes the terminal illness, which that is basically the doctor says, you know what, hey, this person has 6 to 12 months of living, and at that time, company doesn't actually care if they give you the coverage at this point or when the person passes away, because either way they know it's going to come sooner or later. So at that time, they just give you the full face amount. But I want to touch upon this. Look at this. It's a critical illness diagnosed with a health condition such as heart attack, stroke, cancer, end-stage renal failure, ALS, a major organ transplant. So when you look at this, well, I mentioned few when I was starting, but you look at, there's much more, because there's so many sicknesses that we don't even know about and can be known as critical illness. You agree with me, Steve?
Yep.
So what I love to do is I love to educate people on knowing this, because hey, there is only one guarantee in life, and that's everyone's gonna pass away, and that's 100% guarantee.
Yeah.
That's a fact right there.
That is.
So when I sit down with the client, when I sit down with the family, I want to educate on this. I'm like, listen, even if don't look at life insurance as a liability. Don't look at life insurance as a bill. Look at life insurance as an asset. You pay $100, you have about $500,000 assets sitting somewhere waiting, and that's for your family. And now with these beautiful programs, you can tap into, and you don't have to pass away to use it. You can use it while you're still alive.
Yep.
Then comes the chronic illness. And again, it says unable to perform 2 out of the 6 activities of daily living: bathing, continence, dressing, eating, toileting, transferring without assistance, or you're severely cognitive impaired for a period of at least 90 days. So this is so important, and this is so important to have, because I always say this to my clients, Steve. I say, hey, this is like a how do I say it? This is like an underwear to everyone.
Yeah.
Everyone needs to have it, and have it with them always. Because why? It's super important. Again, we're not done with it, because people still have questions. They're like, okay, all right, you're telling me I don't pass away premature death. Okay, I'm not going to retire, and I'm not going to get sick in between. What if I'm driving on the freeway or at work, I'm driving on the freeway, some idiot comes and crashes from the back, and I get injured, and I have to stay at home. I can't move. I need help from somebody. What happens at that time? Well, that was a great question. People started asking the companies, and what companies brought? They brought a new program. It's called the long-term care. What is a long-term care? Long-term care basically means, for any reason, Steve, for any reason you get sick and you cannot perform again for more than 90 days, you can accelerate 2%, okay, from your coverage, from your $500,000 or whatever coverage you have, distribution, tax-free money. So what happens? Someone has a situation, and they can't go to work, for example, for 4 months or 5 months, and they have $500,000 coverage. They call their employer. They're like, hey, this is the situation. It has a doctor proofs and everything. Companies talk to the doctor. They look at the situation. Yeah, this person is going to go for at least 4 to 5 months, or even 2 months or 3 months. Let's say it's going to go for 5 months. What happens? They put in a claim with the insurance company, and the insurance company says, yeah, this is serious. You can't do the 2 out of the 6 daily activities. They're going to write you a check every month. They're going to send you a check, and you can do whatever you want with that money. You can hire someone to, on the comfort of your own home, help you out, like a nurse. You can pay your rent or your mortgage, your car payment, whatever you have. And there's a chance of you getting better. Why? Because they only told you 4 to 5 months. So what's going to happen? The $500,000 coverage you have, now you use, let's say, $50,000 in the 5 months, okay? Now the $500,000 dropped to $450,000. So now your death benefit is only about $450,000. Why? Because you already used the $50,000. But during those 5 months, you don't pay any payments no more, any premiums. Why? Because they stop it. Now, once you go back to your job and now your coverage is at 450. Now they're going to calculate your payments based off of the 450,000 instead of the 500,000. So this is the evolution of the life insurance, and I'm going to show you more slides, and I'm going to show you what types of life insurance there is out there. And it's super simple. It's super simple. Any questions, Steve?
No, I mean, so far I'm just taking a lot of notes, man. Great stuff, great knowledge. I mean, things I wasn't even aware, especially with that 2% monthly distribution that you can use. And then it's tax-free. So those are great stuff. And then also the no premium for the time that you on LTC, which is long-term care.
That's super important, yeah. Because a lot of people, if someone is in that situation, they have no income coming into them, what's going to happen? They don't want their policy to lapse.
Exactly. And then also one of the things I love about this is that people usually think that it's all about death, what you're going to leave behind for your family. But the best and most important thing is that if for any reason that you got injured, the long-term care is going to help you stay alive for sometimes, get you the proper medical attention you need. And especially with critical, chronic, terminal illness, sometimes those runs in the family and people don't even know. So I think those are great knowledge that people need to be aware of, and being able to make a decision that's going to benefit their family, not only for the future, just in case something terrible happened, but at least while they're still alive. So I think that's great stuff.
Absolutely. And just to recap on what you said regarding people who have like pre-existing conditions, and it can go on generations because of the genes and stuff like that.
Mm-hmm.
Now I'm in scarcity. Why? Because see, my grandpa, my own grandpa, he had an open heart about 20 years ago. Okay.
Mm-hmm.
My dad, he got an open heart. So what's the chances of me having a heart problem?
Yeah, it's about you right there.
Exactly. So me being knowledgeable about this, and this is a product, but me knowing, the chances of me having a heart problem is very high. So what do I have to do? I have to keep myself in great shape. I have to eat healthy. I have to do a lot of exercise. I don't know, Steve, if you can tell, but I work out almost like every day.
It's good stuff, man. Yeah, I can tell. So I can see the guns.
Thank you. So this is the evolution of the life insurance. So now let me show you the two types of life insurance, okay?
Okay.
Super simple. Everyone, super simple. There's term life insurance and there's permanent life insurance. What is it? Term life insurance is to cover your temporary liabilities. A permanent life insurance is to cover for the rest of your life. For example, before, when I was talking about back in the days, the hottest product was a term policy. And it worked this way. You pay, you pass away, your family gets the check. Your gets the death benefit.
Mm-hmm.
Okay, simple. Your beneficiary gets the death benefit. But throughout the years passed by, with the living benefits that came on, companies started offering living benefits within a term policy. And the term policies go 10, 15, 20 to 30 years. So you gotta fit in that time range. Let's say something happens to you in the 31st year, I'm sorry.
Mm-hmm.
I'm sorry, I don't think they're going to pay you out. So you got to be very disciplined to live within those 30 years.
Yeah.
Again, why many people get 30 years? Because a couple of reasons. They have a house. Well, I want to touch up on this again. Many people, you ask them nowadays, what's your biggest asset? And they say it's their house or their car. I agree with you. It's your car or your house. It's an asset if it's paid off. If it's not paid off, it's a liability. I asked them, what's your biggest asset that you ever have? It's your income, your ability to work, and your life. That's the biggest asset ever. Why? Because if you take yourself out of the picture, who's going to provide for the family? Who's going to pay the mortgage?
Exactly.
So you're the biggest asset to your own family. And I wanna add this, Steve. Let's think of it this way. Steve, you know about the real estate industry. In order to close escrow, what's number one in California? What's the number one thing they require you to have before closing escrow?
You need to be able to. You need to have the money.
The money, and they also require you to have fire insurance.
Yeah. Well, it depends on the states too.
Exactly.
Sometimes,
That's
yeah,
why I said in California. That's
yeah,
number one.
yeah.
So in California, in order to close escrow, they're like, you need to have a fire insurance.
Yeah, because that's typical in California. Because brush fire could easily sweep away, and then that's probably in Florida. I mean, you know, insurance
Hurricane.
are required, especially if you're getting if you're giving the bank a mortgage. Now, the reason I say giving, because a lot of people don't know this, a mortgage, the bank doesn't give it to you. The bank
Mhm.
give you the money. You give the bank the mortgage.
Yeah.
So that's the difference, and I just wanted to emphasize on that.
Exactly. Exactly.
Yeah.
And thank you for clarifying that. Yeah. So in California, in order for you to close escrow, they require you to have a fire insurance. So that's regarding the real estate. Hey, you go buy a house. I mean, you go buy a refrigerator or a computer or whatever it is, or iPhone or Samsung. What do they always offer you? Insurance, right?
Yep.
Protection.
Yep.
You go buy a car. In order for you to take it out of the dealership, they require you what? To have an insurance.
Yep.
Why? To protect the third party.
Yeah. And then also you got to keep in mind as well, and especially with like the motor vehicle industry, insurance is a requirement. It's not even an option. Because
Exactly.
what happened is that if for any reason you don't have insurance, your license is going to be suspended. So
Exactly.
those are the things, the measures that they put in place, so that way to make sure that you always do. It's you know it bothers me now that I'm looking at it, because really people like to be forced to do things when things that looks to be optional are usually the most important things. For example,
Exactly.
a car insurance, they forced it on you, right?
Yep.
However, your life insurance is more important, because guess what? It's the irony of the life we live, because really most of the times we pay attention, we look at the things that usually optional, like having the courage to go after your dreams. That's an option. Or you can surrender to get a job. Now,
Exactly.
there's nothing wrong with a job as long as you're using it for the right purpose to buy your future. That's another story. But most people usually just focus on what the government's required. They just the bare minimum. Like they'll get a car insurance, not the coverage that will cover the whole car and then the other person, just the minimum that's required by the state. And
Exactly.
that's usually not the best financial decision, because what happens if your car breaks down? Now you don't even have the coverage to fix your car. And interestingly enough, is that there are things that you can add to your car insurance in order, if your car breaks down, the insurance company is going to fix it. And then also they give you the rental as an option, but you have to have the right policy.
Exactly.
So it's just
So many additions
fascinating.
to it.
Go ahead.
I'm like, there's so many like small stuff that people don't know about, but yeah, you need to have a rental to it.
It's the awareness, and
Yeah.
that's one of the things that I really want to emphasize on. I really want to help people raise the awareness of what we can do out there, because at the end of the day, it takes people like ourselves to self-educate, because really those are not things that we're learning from school. And
Exactly.
unfortunately, our parents didn't have the background or the education to help us get there.
Yep.
So it is up to us to make a difference. And that's where the quotes comes in. If it is meant to be, it's up to me. And we have to do it one person at a time, man. And
Absolutely.
I do want to, I cannot thank you enough. I every chance I get, I will always thank you for doing this. And let's get back onto permanent and see where we're going from there.
Yeah. Yeah. And I'm just gonna add something real quick to it.
Mhm.
When you buy the car, they always ask you, you know what, you need a car insurance. Perfect. But let me ask for our audience that are listening to us right now, Steve. I always sit down with the client and I say, if it's a female in front of me, I say, hey, when you had your baby, it was a great feeling, right? They're
Mhm.
like, it's God bless, like it's the best feeling. When they were discharging you, did they ask you, Miss, do you need to have a life insurance on your kid in order for us to discharge you? No.
No.
Why? Because that's your own liability. They don't care what's going to happen to your kid or whatever.
Yeah.
Because that's your own liability. So when I heard that for the first time from my mentor, I'm like, that's something powerful. Why? Because you say that to one person, it gets them thinking already.
Mhm.
Because we're not educated on how important life insurance is.
Yes, sir.
Again. So going back to term, again, It's death benefit. Now people have the option of having a death benefit and living benefit, and it's a term policy. Covers temporary liabilities and goes from 10, 15 to 30 years.
Mhm.
So now to the permanent life insurance. Now, permanent life insurance depends on the companies, what they offer, and all the stuff. But in general, it always has a death benefit: 100,000, 200,000, 300,000, whatever the coverage you have.
Mhm.
As a cash value, the supplemental retirement that builds up a savings program for you, and you can take out tax-free money up to 90%. Okay. As a living benefit rider, and also it has a long-term care. So within one life insurance, you have so many benefits in one policy. So these are the two types of life insurance: a term and a permanent. People ask me, which one should I get? And I always tell them, don't ask me that question, because it's like me asking you, is your liver important or is your heart important? They're both important. You just got to know which one fits you the best. And for audience, let me tell you guys something: the difference between term and permanent. Term life insurance, you can get a high coverage with low monthly payments because it's affordable.
Mhm.
Okay, it's affordable. Permanent life insurance, it's until the rest of your life, but it's going to cost you a little bit more. Why? Because there's so many other benefits to it.
Mhm.
So that's the two types of life insurance. So any questions before I move on?
No, sir. We're clear.
All right. So talking about how the money works and everything, Steve, this is my favorite slide because again, when I would say it's a pro and it's a perk for me coming from banking industry because I know how both industries work.
Mhm.
So when people ask me how does the money work within the insurance policy and stuff like that, I always tell them this: how do you want your money to grow? And there's options. You want your money to be in a fixed account, in a variable account, or indexed account. Everyone has their own taste. Everyone has their own thoughts, whichever one they want, whichever one they prefer.
Yeah.
So I'm just going to go briefly and explain how everything works. A fixed is basically you put your money in a somewhere fixed. It's going to have a steady growth. They're like, hey, you put your money in the CD, you put your money in this money market account, or you put your money under your mattress, you're going to have a fixed guaranteed interest, a rate of return. 2%, 1%.
Slowest way to grow money.
Exactly. And many people go to this. Why? Because, hey, they're like, there's no risk. There's no risk involved in this. I don't have to lose, and I can care less if it's going to go crazy big. I just want my money to be somewhere safe. Perfect. Yeah. That's for that person. That's a fixed. But again, there's another option. It's the variable. And
risk takers.
Yeah, it's the variable, and that's the risk takers. Exactly. It's the gamblers. Why? Because in this, you have a high chance of a high gain, and you have a high chance of high loss.
Yeah.
Why? Because your money's with the market. Market goes up, you go up with it. Market crashes, and we know what happened during this pandemic. A lot of people who had the 401ks, a lot of people who had their money in the stocks, crazy stuff happened.
They have 101ks now.
Exactly. So people don't know about it. And regarding the 401ks and how a lot of people transfer their money from a 401k to a life insurance, and yes, to our audience, you are able to do that. Why? Because a lot of benefits to it. And there's not a lot of time to talk about it right now, but if there's any questions that people have, Steve,
we can always find some time to come back to maybe dedicate a specific day. Maybe we talk about that specific transition, how to do that.
Exactly.
I know personally, I would definitely want to get some nuggets on that because I know the value of being able to make the transition is definitely a better way to grow your money. And best thing about it as well is growing it tax-free. So that's the best thing.
That's the beauty. And let me tell you one more thing. People who have the 401k, I'm just going to go like very quick on this. People who have 401ks, when I was working at the bank, I never contributed to my 401k because at that time, my brother gave me a life insurance policy, which had the savings and everything, and he explained to me how everything worked. So I'm like, instead of putting my money contributing to my 401k, I'm just going to contribute to my life insurance policy. So I'm like, okay, I'm not going to contribute to my 401k. But you know what happened? When I left banking, I still had like $2,000 in my 401k. And
Mhm.
they're like, you know what? I had 2,500. They're like, you know what? You can take this money out. I'm like, okay. With the state, federal, and early withdrawal penalty, you know what was left for me?
Probably $500.
Probably, yeah.
Yeah, because there's a 10% penalty
Early
just for
withdrawal
taking it
penalty.
out early, and then whatever the tax is just for not rollover and things like that. So
So
yeah,
imagine,
definitely.
so imagine this, Steve. People who have been working for a company for a X amount of years. Imagine all the money they lost and gained, because in a 401k, whatever you gain, you don't lock that in. You lose it.
No.
Market crashes.
If yeah, and one of the things also is that there's a lot of people that had worked for certain companies and then leave to go somewhere else, and they never even know they
Exactly.
had 401k sitting there, and then
Oh,
it's like there's a lot of money in the state treasury's office that people don't even know how to claim those funds. So I thought that was very interesting because lack of awareness will hurt you.
exactly.
Believe it or not, they say what you don't know won't hurt you. That's a lie, flat
Exactly.
out lie. Because what you don't know will hurt you, and surely the hurt is gonna be impactful to your family's future.
So true. I absolutely agree with you, brother. I absolutely agree with you. And then third, we got the index.
Hmm.
And
That's my favorite, by the way.
I will tell you, it's probably one of the best, and it's, in my opinion, it's the best,
Yeah.
and it's my favorite too. But again, depends on every person. Because my friend is like, I love index, but I'll go over variable. I'm like,
Hmm.
okay, why? Because he's into stocks.
Yeah.
I can't do anything about that. He likes to lose. He likes
Hmm.
to get a high rate of return, and he likes to lose too. Well, he doesn't like to lose, but he knows about it.
Yeah,
So
he knows.
talking about the index for our audience is a mirror of both fixed and variable.
Hmm.
Now people are like, what is that aura? Well, when I say mirror, index, you have a gain, but you have no loss. What I
Yep.
mean by that, market goes up, you get a certain percentage on your money. For example, stock market does 30%.
Hmm.
Companies will give you a specific cap of interest. For example, 13, 12, 14, 15, whatever it is. Okay.
Hmm.
Market drops, market crashes,
You don't get
you
touched.
don't drop. You lock it in at a floor. So it's like a ladder. Market goes up, you go up. Market drops, you lock it in. It goes up, you go up. So it's the mirror of both. It goes and performs in the fixed and variable. It looks at what both are doing and uses that as for its own advantage. I always say this, Steve. It's like
Hmm.
two walls, brother.
Yep.
Market goes up, you hit one wall. Market drops, you hit another wall. So you're safe.
Okay.
No crashing. So this is our options for your money. And why I put this slide, and this has to do with more about the investment and stuff like that, but it also involves in the insurance industry too, in the life insurance industry. Why? Because there are products that offer you a fixed for your money. There are
Hmm.
products that offer you variable for your money, and
Hmm.
there are products that offer you index.
Yep.
Now let me ask you something. If it was for you, Steve, which one would you go with?
Man, I'll probably have two accounts. I'll mainly the biggest one I'll have with index,
Mm-hmm.
and then the one that I want to take a wild card on will always be variable, just so I know, like maybe play money. Just to
Exactly.
say that, you know what, this is a secure family, and this one is to live a lifestyle that I can afford it. If I take a hit and eventually when it goes back up again, this is basically that forget money. That when it hits that milestone that I wanted to reach, and I can take it out and then do whatever I plan to do. Maybe buy a new investment property or something like that. So,
Exactly. And just to close off with the slide, there's no right or wrong answer to whichever people want, because
mhm,
again, it depends on what's right for the client and what the person is in need of.
yeah.
And I always say this: I I myself, there's two types of Steve. There's two types of. Can I stop sharing this?
Yeah.
Okay, give me 1 second. There's two types of. All right, there you go. Now I can see you. So there's two types of families in America, Steve. There's family A and there's family B.
Mm-hmm.
What the differences are? Family A, Steve, they make, let's say, 100,000 or less. Okay.
Mm-hmm.
Family B makes 250,000 or more.
Mm-hmm.
Again, going back to family A, they rent a house. They have a term life insurance.
Mm-hmm.
They have no financial advisor or a professional. They have no person guiding them on their money. Only person is their bank teller. Okay.
True.
Going back to family B, they make 250 or more. Instead of renting, they own a house.
Mm-hmm.
They have a permanent life insurance. They have a financial advisor. They know the money game, tax obligations, and they have a diversified portfolio.
Yep.
What's the difference? Hey, let me tell you this, man. My goal and my mission is to get people from family A to understand how the family B feels.
Yep.
Because my mentor always says this. He says, the rich get richer and the poor get poorer. And who suffers in the middle is the middle class, because we're the ones providing for both.
For both, yeah.
Because we work hard, we do everything, and we pay taxes, and it goes for both.
Yep, that's true. Because if before you take home anything, Iris already took his share, and he never showed up to work one day.
Uncle Sam took it.
Uncle Sam is the worst uncle in America, man.
Oh my God! Tell me about it.
He never misses his payday, and he does not like to pay.
And exactly. And but see, many people, many people, if they understand the money game and if they understand how it works, I think it's like super beneficial. And one thing I would say is probably a goal of mine is to have financial education implemented in every education system in America.
Yeah, definitely. And I know a company that's actually working on that. And basically, they doing scholarship funds, and each one of their protection plan they actually sell $2 goes towards that funds, and each year they give scholarship to a high school student, sometimes two. And I've actually witnessed the kid get about 250,000 last year in scholarship. So definitely, we have some organizations that doing that, but we just need more people like ourselves that that can go to the masses.
Yeah.
Because remember, who I know you don't know, and who I know that may know someone that I don't know will then share the message, and that's how it has to start.
Exactly.
And then the objective is to reach one person at a time, and hopefully at some point we can create that chain, that domino effect, because it's something's gonna have to change. Because you see, the lack of financial education is what makes a lot of people suffer. And with the statistic that I've seen, average Americans pays over $1 million in fees every year, over a lifetime, really, because of the lack of financial education. You see, because they don't know, how certain things works, like interest rates and how much interest they're paying for certain things, just because they're that 3-digit number that's lay over their head. That just imagine you're in a movie where you walk and everybody has that 3 digits over their head, and that digit determine who their character is. But truly, people have different challenges, but it's the lack of education. They don't know what's the value of that number and how to leverage it. And I think one of the most important thing is the leverage, because life insurance is a vehicle. And it can be leveraged for multiple different facets of life if you actually understand it. Yep. And the lack of that education is why a lot of people are suffering. So definitely my goals to shed some lights on the topic. And hopefully, at some point we'll be able to say that, what, we've helped 100,000 families. And that's the goal, man.
And just to touch up on what you said is, it's one thing making money, making wealth, and it's another thing preserving that wealth.
Yeah.
Because many people, they can make a lot of money and it's gone.
Yeah.
In a day.
True.
And what you said regarding life insurance is a tool. It literally is a tool you can use for different purposes. And it's absolutely true. Why? Because imagine life insurance as a jewelry box with a lot of gold inside.
Mm-hmm.
Okay, I'm gonna say that one more time. It's a jewelry box with a lot of gold inside. can be used for so many different purposes. Tax
Oh yeah.
purposes, uh, whether it's to pay off your house, whether it's to pay for your kids' tuition for college, for church, to give charities, what's it called, contributions, stuff like that. So
You,
many ways you can do it.
you know why you brought this up, man? One of the things that I want to bring you back on is gonna be creating a family bank. That's gonna be very. It doesn't have to be long, but I would love to get your insight on that because I know it's a very powerful tool, and it's something that can only be used within that insurance industry. And a lot of people don't know how to take advantage of that. And I think you know what? One of the things they say is that if you want to hide a secret in America, put it in a book. And that's one of those things that's in a book somewhere.
Yeah,
And then I'm sure I've seen the value of it. And my ultimate goal personally is to be able to leverage it to build family generational wealth. Because a lot of people are not thinking of the next generation; they're only living for today. But that's not their fault. It's the lack of awareness again. And no, so
super true. And again, I want to say thank you so much for having me on your show. And again, you're someone I can trust. You're someone I really respect because I see the great work you're doing. And for the people that are watching this, I want to say this guy right here is special. Just keep an eye on him because great stuff are about to happen. And once again, I'm grateful to know you. I'm thankful for being on the show, and I'm more than happy and honored to be back here again and talk about different topics because there's so many great topics. It's just time is limited.
I know, man, and I cannot wait. We're gonna potentially do some sort of mini series where we can elaborate more on things and be open for more questions and possibly, I'll put it up for early Q&As so that we can address some of these questions ahead of time. So definitely looking forward to it, man. And thank you so much for taking the time out. And you have a great rest of your day, man.
Thank you,
Appreciate it.
brother. Likewise, you too. Take
All
care.
right. Perfect.